Gandang araw po sa inyong lahat. Ako po si Lovely Donna, ang unang reporter ng Chapter 12 at ang topic namin ay Dealings in Properties. The objective of our report are distinguish capital gains subject to regular tax from those subject to capital gains tax. Understand what constitutes selling price and the rules on tax basis. Understand the tax treatment of gain or loss on ordinary assets and other capital assets. Master the rules on the measurement of the net capital gain or loss and the rules on net capital loss carryover. Comprehend the rules on tax-free exchanges and recognition of gain or loss and the determination of basis of tax received in. Master the rules on wash sales as they relate to capital losses subject to the rules of regular income tax. Be able to interrelate the rules of regular income tax to the rules of capital gains tax and familiarize themselves with the list of transactions considered as exchanges. The subtopic of my report are dealings in property subject to regular income tax, determination and treatment of gain or loss, the holding period rule, presentation of gains or losses in the income tax return, the effect of status rules on dealings in properties, net capital loss carryover, and last is special rules in tax basis determination. This chapter discusses tax rules on the measurement and recognition of gains and losses arising from dealings in properties not subject to capital gains tax but subject to the regular income tax. So, pag sinasabi nating properties, ito yung pagmamayari ng isang tao na tulad na lamang ng lupa, bahay, sasakyan at iba pa. Now, let us discuss about dealings in properties of income taxation. In dealings in properties, it's involved the sales, exchanges, and other disposition of properties such as ordinary assets or capital assets. May dalawa itong assets, which are ordinary assets and capital assets. Pag sinasabi nating ordinary assets, ito yung inventory, supplies, and properties, plant, and equipment na ginagamit na sa business ng taxpayer. Pag sinasabing capital assets naman, ito yung other than ordinary asset such as homes, cars, investment properties, stocks, bonds, and even collectible or art for business. A capital asset is an asset with a useful life longer than a year that is not intended for sale in the regular course of the business's operation. Now, let us discuss the determination and treatment of gains and losses. To discuss this, I separated the determination and treatment of gain or loss for us to understand clearly. But first, let us know first what is gain and what is loss. Pag sinasabi nating gain, ito yung increase in the value of an asset while ang loss refers to the loss of value. Parang addition and subtraction lang. Gains is increase or addition and loss is decrease or deduction. If a company sells an asset, the determination of gain or loss is dependent on the book value of the asset according to the company's financial document. To determine gain or loss in dealings in properties, ganito lang yan. Ang selling price ay isubtract natin sa initial purchase price. The result is gain or loss. Ipaghalimbawa na lang natin yung shampoo. Yung shampoo binili doon sa market ng tag 6 tapos ibenta sa tindahan ng tag 7. So 6 minus 7 is equals to 1. Negative 1. So ang result is gain or loss. That is loss. So next is treatment of gain or loss. Meron tayong dalawang gain and losses which are ordinary gains and losses and capital gains and losses. So unahin natin yung ordinary gains and losses. Ordinary gains are separate items of gross income subject to regular income tax. It is taxable in full. Ordinary losses are items of deduction from gross income. The determination of net income from business or profession. It is deductible in full. Deductible, samantalang yung ordinary gains ay taxable income. A net capital gains is an item of gross income subject to regular income tax. A net capital losses is not an item of deduction against gross income. Gains and losses are treated differently for tax purposes depending on if they are short term, usually occurring in 12 months or less, or long term, taking place over more than 1 year. Gains can typically also be offset by corresponding losses for tax purposes. Next is the holding period rule. If the capital asset is held by an individual tax for a period of meron tayong dalawang holding period which are short term, not more than 1 year, 100%, and long term holding more than 1 year, 50% of the capital gain or loss is recognized. This is the illustration of individual taxpayer of holding period. So, regardless of the length of the holding period, 100% of the capital gain or capital loss is recognized. The holding period rule does not apply to corporations. So, illustration of individual taxpayer. Mr. Makate sold various properties as follows in 2016. The items are car, office supplies, laptop, home appliances, books, vacant lot. So car, date acquired 8/14/2014, date sold 2/14/2016. Gain or loss 100,000 pesos. Office supplies date acquired 6/1/2015, date sold 12/5/2016. Gain or loss 20,000. Laptop, date acquired 4/5/2015, date sold 4/5/2016. Gain or loss 80,000. Home appliances 7/21/2015, date sold 8/24/2016, gain or loss 160,000. Books, date acquired 12/28/2015, date sold 11/26/2016, gain or loss 30,000. And vacant lot, date acquired 2/14/2015, date sold 12/3/2016, gain or loss 250,000. The net capital gain or loss shall be computed as follow. So, ang item sold na i-compute na lang natin ay yung car, laptop, home appliances, and books. Because the sale of the vacant lot is excluded since it is subject to the 6% capital gains tax. The gain on the sale of the office supplies is excluded in the net capital gain computation, since it is an ordinary gain separately reported as an item of gross income. So, let us compute the items sold of Mr. Makate, which are car, holding period, long term. So, 100,000 times 50% is equals gain or lose 50,000 pesos. Sa laptop naman, holding period is short term. 80,000 times 100% is equals to 80,000. Home appliances, long term, 160,000 times 50% is equals to 80,000. Books, short terms, 330,000 times 100% because it is short term is equals to 30,000 pesos. So, 50,000 plus 80,000 minus 80,000 minus 30,000 is equals to 20,000 pesos. So 50,000 plus 80,000 is equals to 130,000 minus 80,000 is equals to 50,000 minus 30,000 is equals to 20,000, and that is the net capital gains. So let's proceed to the integrative illustration. Mr. Tayabas, a self-employed resident citizen with personal exemption of 50,000 pesos, reported 800,000 pesos gross receipts and 300,000 pesos cost of services before business expenses of 240,000 pesos. He also had the following dealings in properties during the year. So this is the dealings in properties of Mr. Tayabas. Meron siyang ordinary assets na equipment and old machines. Ang holding period ng equipment is 8 months and gain or lose is 20,000. Ang old machine naman ay 18 months, gain or lose 25,000. Meron siyang capital assets which are foreign bonds, holding period 4 months, gain or lose 100,000. Domestic bonds 15 months, 150,000. Domestic stocks 8 months, 80,000. Foreign stocks 18 months, 40,000. The net capital gains shall be computed as follows. So, yung domestic stocks ay hindi natin nasali sa computation because it is subject to the 5% or 10% capital gains tax. So, ang i-compute na lang natin ay foreign bonds, domestic bonds, foreign stocks. Foreign bonds, 100,000 times 100% is equals to 100,000. Domestic bonds, 150,000 times 50% is equals to 75,000. Foreign stocks, 40,000 times 50% is equals to 20,000. So 100,000 minus 75,000 is equals to 45. Mali. Sorry. 100,000 minus 75,000 plus 20,000 is equals to 45,000 pesos. 100,000 minus 75,000 is equals to 25,000 plus 20,000 is 45,000 pesos, and that is the net capital gain. So next is the presentation of gains or losses in the income tax return, which is kay Mr. Tayabas din na illustration. Integrative illustration of Mr. Tayabas. So the reported gains and losses shall be presented in the income tax return as follows. Net sales of Mr. Tayabas or receipts is 800,000. Add other taxable income from operation. So meron si Tayabas na fees which is 800,000 and less cost of sales or services meron siyang 300,000. So, ang gross income ni Mr. Tayabas from operation ay 800,000 minus 300,000 is equals to 500,000. Meron si Tayabas na non-operating taxable income, ordinary gain on equipment na 20,000, tapos ang net capital gain niya ay 45,000. So, 20,000 minus 45,000 is equals to 65,000. And so, let us subtract the cost of sales or services, which is 500,000, and the net capital gain is 65,000. So, the result is 565,000, and that is the total gross income. So, ito na yun. Total gross income na 565,000. Tapos, natin yung allowable deduction na meron si Tayabas business expense na 240,000 pesos and sa old machine niya, ordinary loss ng old machine ay 25,000 pesos. So, i-deduct natin yung total gross income na 565,000 and allowable deduction na 265,000 pesos and the result is 300,000 pesos, and that is the net income. The ordinary gains or loss are recognized at their full amounts. The holding period rule is applicable only to the measurement of gains or losses from capital assets other than stocks and real properties. So, i-assume natin na si Tayabas is corporation. The net capital gain of Tayabas Corporation shall be computed as follows. So, foreign bonds, 100,000 times 100% is equals to 100,000 pesos. Domestic bonds, 150,000 times 100% is equals to 150,000. Foreign stocks, 40,000 times 100 percent is equals to 40,000. So 100,000 minus 150,000 is equals to 50,000 minus 40,000 is equals to 10,000, and that is the net capital loss of Mr. Tayabas. So presentation in the income tax return, the reportable gains and losses shall be presented in the income tax return of Tayabas Corporation as follows. Sales revenues or the receipts of Mr. Tayabas is 800,000 pesos, and the cost of sales or services is 300,000 pesos, and the gross income from operation is 500,000 pesos. So, i-add natin yung other taxable income not subject to final tax na ordinary gain on equipment na 20,000 pesos. So, 500,000 pesos plus 20,000 pesos is equals to 520,000 pesos. That is total gross income. Ating i-deduct yung allowable deduction of business expense and ordinary loss on old machine ni Mr. Tayabas na nagtotal ng 265,000. And so, i-deduct natin dun sa total gross income na 520,000 minus allowable deduction na 265,000 is equals to 255,000 pesos nga taxable net income. A net capital loss is not deductible as an item of deduction for both individuals and corporation. So next is the effect of SEDAR's rules on dealings in properties. If the taxpayer is taxable in world income, such as in the case of resident and domestic corporations, the rules of dealings in properties apply to all properties regardless of location. However, if the taxpayer is taxable only in Philippines incomes, the rules dealings in properties apply only to properties located in the Philippines. So kung saan yung business kung saan yung location ng properties mo or yung business mo, doon lang din ma-apply yung rules of dealings in properties. So, kung saan yung location. This is the illustration of CITO's rules. So, John Hay, a Filipino citizen, reported the following gains and losses from dealings in properties. So, meron siyang ordinary assets na delivery truck in the Philippines, obsolete inventories in the Philippines, commercial building abroad, and used equipment abroad. Capital assets naman niya ay domestic bonds held for 14 months and non-resident foreign corporation stocks held for 8 months. The status of the ordinary gain or loss shall be ordinary gains na delivery track within 120,000 and total of 120,000. Commercial building without 300,000, total of 300,000. 120,000 plus 300,000 is equals to 420,000. Ordinary loses obsolete inventories within 40,000, total of 40,000. Used equipment without 80,000, 80,000 and world is 40,000 plus 80,000 is equal to 120,000. Considering status rules, the net capital gain or loss from capital assets other than domestic stocks and real properties are as follows. Net capital gains or loss, domestic bonds 50% within 50,000 pesos. Foreign stocks without 30,000 pesos. So 50,000 minus 30,000 is equals to 20,000. That is the net capital gains or loss. So, the reported results of dealings in properties are as follows. If John Hay is kung resident si John Ray, resident citizen, meron siya ordinary gain of 420,000. Ordinary loss naman niya ay 120,000. Net capital gain ay 20,000 pesos. Kapag hindi siya resident citizen, meron siya ordinary gain na 120,000, ordinary loss niya ay 40,000, net capital gain or loss is 50,000 pesos. The global net capital gain or loss shall be considered if John Hay is taxable on world income such as when John Hay is a resident citizen. Only the Philippine net capital gain or loss shall be considered if John Hay is taxable only in the Philippines, such as when John Hay is non-resident citizen, resident alien, or non-resident alien engaged in business in the Philippines. So next is the net capital less carryover. Individual taxpayers are allowed to carry over net capital loss as a deduction against net capital gain of the following year subject to the following limits. Meron tayong dalawang limits. The limit 1 and the limit 2. Ang limit 1 ay amount ng net income in the year. The net capital loss was sustained at ang limit 2 ay ang available net capital gain in the following year. In other words, the amount of the net capital loss carryover shall be whichever is the lowest of the actual net capital loss, limit 1 and limit 2. The net capital loss carryover, this is strictly for 1 year only and is applicable only to individual taxpayer. Corporate taxpayer are not allowed under the NIRC to carry over net capital loss. Rationale of the first limit, net capital at incurrence of capital loss. The amount of capital loss carry over shall not exceed the net capital loss was sustained. This rule is anchored on the tax benefit rule. If the law allowed full deductibility of capital loss above this amount will not have a tax benefit. To be fair, the carryover shall not result in allowing the taxpayer more than what he could have claimed, assuming full deductibility of capital loss is allowed by the law. In other words, the carryover should not result in undue enrichment to the taxpayer. Rationale of the second limit, net capital gain in the following year. The amount of capital loss carryover shall not exceed the net capital gain in the following year. Allowing capital loss carryover in excess of the net capital gain in the following will create another net capital loss in the following year will breach the 1 year carryover rule under the NIRC. Next is the special rules in tax basis determination. So, meron tong number 1, Acquisition cost for capital assets, non-depreciable ordinary assets such as the land. Any assets purchased for an inadequate consideration or those acquired at less than their fair value at the date of acquisition. Depreciated costs for depreciable ordinary assets. Acquisitions costs include the purchase price, tax assumed, and acquisitions related costs such as commissions paid in acquiring the assets. Letter B is other assets received by exchange fair value of assets received. For assets received, letter C is for assets received by ways of gratuitous titles such as donation and inheritance. For donation, whichever is lower of A, the tax basis in the hand of the donor or the last preceding owner by whom it was not required by donation. Or B, the fair market value at the date of gift. So, if the basis is greater than the market value of the proper by at the time of donation, then for purposes of determining the loss, the basis shall be such market value. Second is inheritance. Fair value of the property on the date of death of the decedent. The third D is for shares received by way of tax-free exchanges. A. For pure share for share swap, the tax basis of the shares exchanged or given is the tax basis of the shares received. B. For share swap with non-cash consideration, the tax basis shall be the substitute as follows. So, ganito yung substituted or formula computation. Tax basis of shares exchange. So that's all my report. Thank you for listening, and other discussion will be discussed in the next reporter. Thank you.